Hello, everyone. Glad to be back. Hope everyone is enjoying their 2026. Um, I first wanted to apologize. This is my first video of 2026 going into March. January and February, I was enjoying a lifelong dream of going to Asia. I'm currently in Sydney, Australia, which is why I'm wearing the tank top. It's a bit warmer here than in Canada, but I've over the last 6 weeks been enjoying trips to Hong Kong, Bali, Thailand, and now I'm in Sydney, Australia. So I do apologize for missing a couple videos. This is my first of the year, and we are jumping right into it. There's a lot to get into, and there's a lot to say externally, outside of Canada, internally within Canada, and we're going to get to every single point here of what our clients are doing, what we're seeing, and how the geopolitical situation right now with the wars, tariffs, etc., how that's potentially going to be impacting Canadians in terms of rates, values, etc. All right, guys. So I missed you guys. Let's get into it. So, first and foremost, I wanted to congratulate the winners of the last month. So, that would be Saeed, Clive, Myra, and Tracy. Congratulations on winning the $25 gift card. And the grand prize, which was the Galaxy watches, ended up going to Katie. So, Katie, I hope you enjoy those Galaxy watches. Next level technology. So, I hope you get to enjoy it. This month's prize, and for anyone who's new, all you have to do is answer the question below, and you'll be entered automatically in winning 4 gift cards as well as this month's big prize, which is an iPad bundle. All right, great. So, a beautiful prize to get you into the better weather into spring. You get to enjoy that for upcoming future summer activities and events. All right, guys. So, this month's question and contest, the question is, what's one thing you'd like to accomplish before your mortgage term ends? I know for me personally, I would like to ideally, based on the equity and based on the value of my property, I would like to refinance, pull out some of that money and buy a home, especially as values are continuing to go down. It does seem to be a good buying opportunity. So I think within the next few years, that's something that I've been looking at. I know a lot of other clients are looking at as well. Please, please, please share what is going to be of interest to you throughout your term. And once you answer that, you're going to be able to be entered into that contest. All right, guys, so let's talk a little bit about what is going on, what we're seeing, and how this might be impacting yourself, your family, your friends, and Canadians across the country. And so the first thing that we're seeing is that first time home buyers over the last few years in this winter market, this is the most amount of purchases we personally seen in terms of first time homebuyers specifically and purchasers as a whole, putting pen to paper to agreement of purchase and sales. More people that we've personally come into contact with are coming off the sidelines compared to the last few years in this winter, or over this course of the last 3 months and over the course of winter, December, Jan, Feb, now going into March. They're coming off the sidelines and they're looking at purchasing properties and they're looking at homes. They're looking at pre-approvals and they're looking at different options. It seems like the reason for that is that values are coming down low enough that it's starting to entice more households, it's starting to entice more Canadians, and it's become a better opportunity for Canadians and specifically first-time home buyers to buy compared to a few years ago where values were exorbitant. COVID obviously created a lot higher purchase price, lower purchasing power for a lot of Canadians, and rates were obviously above, 5, touching even 6%. Now we're in an interesting situation where values are coming down, where it's starting to become a little bit more comfortable for Canadians, first-time homebuyers, specifically like millennial first-time homebuyers, who are feeling like this is going to be their chance and their opportunity to start to jump in. And rates are at a place where I think it seems like rates are at a healthy place when it comes to being in and around the 3.5 to 4.5 range. I don't really necessarily see rates going down or up, but we're going to get into potentially them going up shortly. But being around the 3.5, 4 range is a pretty healthy place. We're not going to see 1.5 again for a long, long while. It would be shocking. And it didn't really necessarily make sense. And that's what kind of created that fuel to the fire when it came to increasing values. So ultimately, I think a lot more Canadians, first-time home buyers, and specifically millennials, are recognizing that this is an opportunity to purchase. Values are coming down. It's an opportunity to buy. And as we saw with COVID, things can flip very, very quickly. And so it's seeming like And for us in our business, for our team, this has been our best winter yet in terms of just getting a lot more purchases out there, getting a lot more pre-approvals out there, and getting a lot more closings specifically for purchases. And so that's something to take into consideration. If you are a client that is looking to purchase and you've gone to a mortgage broker, or you've gone to myself even, or you've gone to your bank and you've been declined, there are specific programs that have helped our specific, like helped our team's clients get to the finish line and be able to make a purchase. And so a company called Arbor is what our team and our clients are starting to leverage and utilize. It's a shared equity program where they share in the upside and they also share in the downside risk. And so they help clients, specifically those who are self-employed without 20% down payment, have been declined by their banks, those who might not have like the best credit scores, or most importantly, those who have a little bit of down payment, but they're looking to maximize their purchase price. So they've gone to their bank, they've gone to me, they've gone to another broker, and they've only been qualified for 400, 450, 500,000 purchase price, but they're looking for townhouses, homes in and around the GTA or Toronto, Toronto proper. Arbor allows you to get to 20% down payment and leverage specific lenders, institutional alternative lenders that will allow you to increase your purchasing power. We've seen as high as $250,000 to $300,000 more compared to a traditional Big Five or Big Six bank. And so, if you're an individual who is looking to get off the sidelines, are feeling still a little bit depressed about their options, or feeling a little bit stuck or confined with their options, this could potentially be a good program for you. So if you have any questions regarding that, feel free to respond to this video over the next few weeks, and my team and I would be more than happy to discuss how Arbor has been able to help some of our other clients get into the home. One quick example was a single mom who had a pretty good down payment, but only qualified for a $450,000 condo. With the help of Arbor, she was able to increase her purchase power and purchase price to $750,000. That included a rentable basement component, which we could use the rental income from the rental basement. And because of Arbor, she was able to go from feeling constrained to a condo of $450,000 to purchasing a detached house in the GTA for $750,000, which included rental component. And because of the rental component of the basement, her monthly cash flow was better. Her mortgage payment was lower because the rental income was obviously offsetting the higher mortgage amount. All right, guys. So again, if you have any questions in regards to jumping into the market, but you feel a little bit stuck, constrained, or don't know where to start, feel free to obviously respond to this video, to this email, and I'd be more than happy to kind of walk you through and see if it would be a good fit for you. It's not a good fit for everyone. Keep that in mind. It's not a good fit for everyone, but it could be a good fit for you, and for a lot of our clients, it has been a good fit so far. So I'd be more than happy to explain that and see if it would be a right fit for you and your family. Okay. Another item that is starting to take effect, we're starting to hear a little bit more and more about it. Toronto Star is talking more about it. The Toronto Sun is talking more about it. Politicians are talking more about it. And we're starting to see the shape of debt engulf Canadians even more so than pre-COVID. So we're seeing higher levels of debt, credit card line of credit debt, than pre-COVID levels. So it's getting to almost all-time levels in terms of debt. And this is a frightening situation. And this is a large, massive challenge for Canadians right now. And so we've all kind of been there, or a lot of us have been there, where you have debt, you don't really know what to do, and you almost feel stuck, frozen, or kind of like almost like an analysis paralysis, where you identify the problem, but you don't necessarily know how to proceed, how to move, what direction to take. And this is specifically for individuals who already have a home, specifically those who have a home with equity. So if you're in a situation where you have unsecured debt, credit cards, lines of credit, even cars, cash flow is getting tighter and tighter, maybe you've lost your job, or maybe even you're just starting to feel the crunch where you're paycheck to paycheck, or your paychecks aren't not even covering your debt. It's just overwhelming with the interest rates, and you're not able to pay off your principal. You're only paying interest payments. Then you have to seriously consider, and we're telling all of our clients to do this right now, you have to seriously consider the option of debt consolidation refinance, leveraging your home's equity to get into a better place. We're starting to see it snowball more and more for Canadians. I just had a conversation with someone who had $200,000 of unsecured debt, another person who had $100,000 of unsecured debt. It's getting out of control. And if you can identify the problem quickly enough, you can solve the problem just as quickly. The challenge that a lot of people are facing is that analysis paralysis. They don't know what to do. They feel really, really stuck and they don't know where to turn. If you nip it in the bud early enough, and by that I mean leveraging your house's equity, refinancing your existing mortgage or getting a second mortgage and paying off that debt to roll everything into one easy payment. So that way you're saving cash flow, lowering your debt load, increasing your credit score, lowering your essentially your credit utilization, and ensuring that you can be in a better place. I would highly suggest at the very least you book a consult with myself or someone that you're comfortable with at the bank, etc., to see what your options are. Because that could be the difference between um, your credit and your debt snowballing from 10 to 20,000 to 40, 50,000, or getting it secured, getting it buttoned up, and ensuring that you have a lot more peace of mind. All right, guys. So that's a huge problem that we're starting to identify. The news outlets are starting to identify it as well, and it's starting to creep up for a lot of Canadians. And I just don't want to see, especially if you have a solution potentially in hand, I don't want to see that snowball for you guys. Um, Last thing, and then I'm gone. It's been a minute obviously since I've did a video, so I just want to hit all the points. But the last thing is obviously this war is having significant global impact. Internally in Canada, without even the war, rates are stagnant right now. They're not really going up or down. They're kind of just staying falling flat. Values are continuing to lower, especially condo values are starting to lower exponentially. Uh, it's not a crash per se, but it's definitely going back to the norm. And there doesn't seem to be an end in sight for how much lower these condo values might go for many reasons. Lack of immigration is one. Uh, Very small square footage of condos that nobody seems to be interested in. Number two, and because a lot of students and investors, like immigration students, like students from other countries and investors, were the ones who were typically buying up or at least renting um, these smaller square footage micro condos, anything less than like 500 square feet. That's all going away. Investors are losing money now, and the immigration students that we once had, they're no longer as plentiful as we had in terms of like the population of them. The migrants are not coming in as much as they once did, which is creating essentially a pressure on the market, which is decreasing the values of these condos. Rents are also coming down, but it's values all the way through. It's not just condos, it's townhouses, it's homes. They're stabilizing ish, but it's still going down. Values are still dropping. So that's one component that we've been talking about over the last few months that you have to concern yourself with. And again, if you're a long-term hold, then that's perfectly fine. If it's an owner-occupied property, you have nothing to worry about. Things will stabilize and start to get better. But ultimately, if you're someone who's looking to do a quick flip, or buy a condo with the hope of selling in 3 years to make a profit, be warned and be ready. That might not happen, and just watch yourself. You want to get good deals up front and not try to hopefully back end a deal hoping for appreciation that never comes, or it's not going to come for a little while. And so how this war is impacting Canadians specifically is that the Strait of Hormuz, which is essentially this like narrow strait along by Iran and Israel, there's no gas flowing through it, which is putting downward pressure, or I should say upward pressure on the impact of gas and oil. It's increasing gas and oil, which is going to potentially create global inflation, increasing in global inflation. If that happens, there might potentially be bond yield increases, which is kind of already starting to happen, which means the fixed rates are going up, and the likelihood of the Bank of Canada increasing rates now, depending on how high our inflation goes, is also potentially likely. So depending on where this war ends up and how long it lasts, there might be there already is gas price increases, but there might be inflation increases, which could create some, let's just say, hard choices for the Bank of Canada right now. And so it is a kind of a tough time to predict. It's kind of hard to say where things are going to go because there's just so much things going on in the world right now that we don't necessarily have control over, and even the Bank of Canada doesn't necessarily have control over. They're just trying to manage what's going on right now. And so keep all of this in mind in terms of what's taking place for you and your families. I mean, I'm still a variable guy, I'm still an adjustable guy, but I like a little bit more risk. I know there's some out there that are preferring the 3 year fix and the 5 year fix. They just want to lock in and just not have, have any concern and not, you know, ride a roller coaster potentially when it comes to rate decisions. Okay, guys. So again, things are still healthy. Things are still going well. I think you just need to put your best foot forward and make sure that you do the what's right for you and your family. And obviously, ultimately, myself, my team, our realtor partners, our lawyer partners, we are all here to help guide you through whatever challenges you might be facing. We are here to help provide a lending hand, provide support, and provide our opinion, but ultimately the choice is yours. All right, guys. So again, any questions, real estate or mortgage related, feel free to give me a call, email, text, etc. I'm here. I'm in Sydney, Australia, but I'm still working. That I promise you, my team's still in Toronto, so we're all still chugging along here. All right, guys, stay warm. Hopefully the weather turns for the better. Today was actually, I'm recording this prior to the 15th, but today was a good day. Hopefully it doesn't snow. Supposedly it's going to snow in the next few days. I hope that's not the case. I hope you guys get to enjoy some nice weather, just like I have been. And thank you guys again for your ongoing support. We appreciate it. We're here for you. And thanks again.